In our last video and live stream, we explained why cryptocurrencies needed to keep falling, and that's exactly what happened. In this video, we're going to explain why Bitcoin and the rest of the crypto market are now at an extraordinary buying point, especially for the long term. Looking at the traditional market, we saw how charts like the Nasdaq completely failed when trying to break through a key support zone that was supposed to take us to new highs. That massive failure, followed by a strong bearish impulse, was our first warning sign. And when we saw the recent breakdown of a critical creek we had been tracking, the traditional market was signaling a likely short-term and immediate bearish continuation. This event acted as a catalyst that led us to analyze MicroStrategy. Since this asset trades on the Nasdaq, we understood that after its channel impulse and range, a climactic bearish action was likely. As I'm explaining, this gave us a strong bearish bias for the short term. Bringing this back to crypto, we were already watching assets like Bitcoin on the 4-hour time frame. On one hand, we had already anticipated this aggressive climactic bearish move. In our last video, the price was testing a key defense zone, and thanks to our cross-market analysis, combined with our understanding of how price moves due to institutional manipulation. And no, don't confuse this with order blocks or institutional trading, which have become trendy in the last 2 years. That's a completely different thing, a total fantasy. Understanding how the market truly works and seeing Bitcoin aggressively testing its defense zone, we knew the market needed, at the very least, a slowdown phase. If it wanted to turn bullish, an immediate V-shaped recovery was highly unlikely. So, after that bearish impulse, the most probable scenario was a slowdown. Our working hypothesis suggested that there was still more room for a downside move in the crypto ecosystem. That's why this recent drop didn't catch us by surprise. In Ethereum, for example, after the climactic bearish action, we expected exactly the same thing, not a sharp reversal, but rather a period of deceleration and further downside before any recovery. The same was evident in charts like Solana. Since we were in the middle of a decline, we saw that there was still room to reach its defense zone, meaning there was more downside potential. Look at how we explain it. Take Ethereum's chart, for example. If we cross-check our analysis, we can see that Ethereum's defense zone is still quite a distance away from this recent bearish attack in the market. What does that tell us? That if Ethereum drops a little more, it wouldn't necessarily be the end of the world. In other words, seeing Ethereum fall further is entirely possible, and there's no reason to panic over it. Even though Bitcoin is currently in its defense zone, what does that suggest? That we could easily enter a deceleration phase. How exactly that plays out remains to be seen, but the idea is that Bitcoin could start struggling to maintain its volatility. In that slowdown, we could even consider the possibility of a market trap, especially since Ethereum, given the space it has left before hitting its defense zone, allows for such a scenario. Now look at XRP. It has already reached its defense zone in a very clear way following the recent collapse. And if you analyze it closely, this asset also has enough room to create a market trap. Again, this doesn't necessarily mean the world is ending. Another key point, if we shift to Solana's daily time frame, the price action is crucial. We've been saying for a while that Solana has an enviable financial standing, yet we saw how market players were looking to mess with the loss of its structure. In fact, I remember yesterday we spotted a POC, one that price barely interacted with, a sign of extreme bearish strength. So, just as we see Bitcoin potentially dropping further as part of a trap due to a slowdown, and just as Ethereum still has room to fall, and XRP could also set up a trap, Solana could easily move toward that structural breakdown if the market decides to push it in that direction. As you've seen, the recent crypto drops, whether in Bitcoin, Ethereum, Solana, or others, haven't come as a surprise. That's why in our latest Crypto Insight Premium livestream, we were looking for an intraday futures trading setup. We were targeting short positions, already analyzing the M15 timeframe. The idea across multiple crypto assets was to wait for prices to rise slightly, giving us a solid entry point based on well-defined structures, then execute short positions from there. We're speculating around this zone, waiting to see if order flow gives us some confirmation, but we'll have to be patient, see if this plays out like a Z pattern, or if we get some sort of collapse that we can trade to the downside. Honestly, the work we do isn't just fascinating on YouTube, but also in our daily Crypto Insight Premium live streams. I want to introduce you to our private Telegram channel, which is completely free. In fact, at the time of recording this video, we're also live streaming for the community. During these live sessions, we look for trading opportunities in the futures market. We focus on intraday trades, and within this community, members also share their operational ideas, what they're working on, and what they're looking for in the markets at any given moment. It's honestly very interesting. This community is constantly learning and improving. So if you're an active trader and tired of trading alone, you can join our community. Signing up is very simple. The requirements are as follows. You need to be a user of BitUnix or BuyDFI, have deposited cryptocurrencies into your BitUnix or BuyDFI accounts with a minimum value of $100, and use this account as your primary futures trading account. In other words, you need to be actively trading. Once you've met these requirements, simply fill out the form displayed on the screen. It consists of just 5 simple questions, and we'll get back to you as soon as possible. Don't miss this unique opportunity to become part of our exclusive Crypto Insight Premium community. Come join us, we're waiting for you. All right, let's get straight to the point. Are we looking at a great long-term spot buying opportunity for the crypto market? I'll explain it to you right now, but first...
Welcome to Crypto Insight, your ethical and moral channel for cryptocurrency technical analysis. Here, we really know what we're talking about. We conduct advanced technical analysis that has been developed for over 12 years. We upload videos several times a week. If you're enjoying what you're seeing, let me know and leave a comment with your opinion. Like the video, subscribe to the channel, and click on the bell so you don't miss the next opportunity.
Let's refine our spot buying hypothesis for Bitcoin and the rest of the crypto assets. First, let's assess the financial health of the traditional market. You're looking at the SP 500 chart on the daily time frame. Right now, we can't say the SP 500 is showing any major signs of weakness, despite all the big-name economists on YouTube warning that a severe crisis is just around the corner. The indicators these economists analyze are valid, and while their reasoning makes sense based on those metrics, the reality is that predicting a financial collapse in the SP 500 has been a recurring theme for years. Their indicators always suggest that a crash is imminent, yet here we are, still seeing exceptions to that theory. This same narrative repeats itself every year, every month. Right now, there's a lot of noise in the market, especially with Donald Trump's return and his aggressive trade and tariff policies. This makes everything seem more chaotic, but in situations like these, whales and major institutions, the real market movers, often see an opportunity to absorb all that fear. We've been discussing this concept on YouTube for weeks now. This entire scenario has been building up slowly, and at Crypto Insight, we spotted it from a mile away. So yes, there's fear in the market, but we're still far from any real black swan event. As long as we don't lose the defense zone I pointed out with an arrow, or the key structure I just outlined, everything they say about the SP 500 should be taken as pure noise. Of course, those indicators reflect real economic problems. The global economy is rotten, there's no denying that. But here we focus on practical market outcomes. What impact will this have on the SP 500 and financial markets? That's all we care about as traders. The broader economic situation is another story altogether. But let's stay focused. There's no black swan event in traditional markets. That means we can maintain a positive outlook on the SP 500. The same goes for the Nasdaq. We're still far from any catastrophic event that could signal a major bear market in traditional finance, and by extension, in crypto. Since we're nowhere near that kind of event, we'll remain optimistic unless the market proves us wrong. So, let's move on to the real meat of the discussion, the main course, or better yet, the appetizer. Now we start getting our hands dirty by analyzing MicroStrategy. Just a way of speaking, because in the end we'll talk about Bitcoin, which is what really matters to you. But trust me, understanding the SP 500, the Nasdaq, and MicroStrategy is what allows us to make such precise projections. A look at MicroStrategy. We're placing a lot of importance on the $285 price level. Right now, we're studying the hypothesis that we might be in the middle of a market trap. And if that's the case, it would be absolutely ideal. In other words, we could be at a market extreme. And this is the moment when Willy Wonka hands you a golden ticket to visit his factory. Now, when you visit Willy Wonka's factory, does that mean you get to keep it? No, of course not. There are no guarantees here, but you've stepped inside, and if things go well, we'll be looking at a market extreme, a situation that, as an investor, should definitely interest you. And I say investor, not trader, because we're talking about the long term here. But look at this, it's a daily chart. If you identify a market extreme, you can set a very tight stop loss, because you're assuming you've spotted an extreme zone. We're searching for that limit, that key level that allows your take profit to reach as far as possible. In other words, working with this theory of market extremes, our own method lets us position stop losses and take profits in a way that heavily favors us. This results in exceptional risk management. That's why, even though we can't have absolute certainty, because no one ever can, that the market will definitely move higher, we do see that we are in an area of opportunity. If the move plays out, the gains will be significant. If it fails, the losses will be minimal. Makes sense, right? Are you following along? Let me know in the comments what you think. Now, take a look at what Bitcoin is doing right now. On this daily chart, we had already anticipated the possibility of a climactic move to break through this structure. That move was expected to target this defense zone. And once it reached that level, as you saw earlier, we expected the price to keep falling simply due to a deceleration phase, which is exactly what's happening. Now, for those of you who are true perfectionists, those seeking absolute excellence, let me give you something interesting. The perfect entry point for Bitcoin, and I'll switch to the 1 hour time frame to explain it properly, happened yesterday, Wednesday the 26th, at exactly 10 p.m. Watch how the price went straight to hit this second institutional target. And when I now show you with cross-analysis what the rest of the assets were doing at the same time, you're going to be absolutely blown away. But don't worry, you don't have to be a complete psycho to understand this, because we're talking about long-term setups. What we're evaluating here is the institutional target of this redistribution phase. The price moves to the first target almost religiously, then pulls back before going for the second one. That's just how institutions operate. But today is a perfect moment to speculate on how far this trap in the defense zone could extend. A real show, a full-on spectacle. technical. And hey, if you'd like to learn exactly how we do this at Crypto Insight, remember you can join Crypto Insight Premium. Link to the access form is in the description. The main point here is that looking for a buy in this trap makes perfect sense, especially when we see assets like Ethereum also reaching their defense zones. Look at how they went for a little kiss. A total show and absolute scandal. And now, after these assets have dropped, come on, a whopping 44%, we're in very interesting macro zones. And some assets have fallen even more. Just take a look at XRP. From its peak, it's already dropped 34%. And now, look at X.R.P's daily chart. See where the defense zone is and where the price is sitting now after surviving a trap. Meaning we shouldn't let it fall too much further, although I'll explain why it still could. Now, let's check out Solana on its daily time frame. It's currently in a macro bullish channel. We've seen what could be described as a black bullish event, something that could be signaling a shift. And now, price has landed on a crucial macro defense zone. Just look at Solana's drop, a massive 55%. That's absolutely wild, which is why we're now in highly interesting areas for potential setups. BNB, on the other hand, is behaving well in its defense zone after triggering a trap, something we're fine with. While other cryptocurrencies have dropped dramatically with those climactic moves, BNB, surprisingly, and yes, I just winked at you, even though you didn't see it, hasn't broken through its defense zone. Instead, it's barely dipped, respecting that level. Pay attention to that. Now, with Link, we have another major spectacle, but in the best way possible. We've mapped out a volume profile across this entire market phase, whether it was going up, down, or just undecided. There's been a ton of transactions here. That's why we're focusing on identifying the volume profile and pinpointing where the POC is. Now, check this out. While Bitcoin was hitting its second institutional target, look at what Chainlink was doing at that exact moment. Let's switch to the 1-hour chart. This is precision timing at its finest. Those who truly understand this will be the ones who find the real opportunities. We can see that Link has also dropped a staggering 54%, hitting a highly significant POC. Meanwhile, take a look at charts like XLM. Just like with MicroStrategy, we're evaluating the possibility of a trap that could recover in the future. We've also identified this wedge formation. Let's see if it breaks to the upside. But be careful, not everything that shines is gold, and I'll explain why right now. Here we have SUI as well, an absolute spectacle, respecting the defense zone almost religiously. Incredible. Every single one of them is at a market extreme. That's the key takeaway here. Different structures, different reasons, each asset has its own story. But what really matters is understanding this confluence. For example, look over here on the right. Right now, BNB is down 0.23%, while the rest of the market is up 5%, 2%, 3%, 4%. Why? Because like I said before, BNB couldn't afford to drop the way everything else did at the time. That's the reason. These are the details you need to understand, not the nonsense from those clowns who just throw random charts at you, make 1,000 meaningless drawings, slap on a bunch of indicators, and call it analysis. That's just noise. Don't let it pollute your thinking. So for the entire crypto ecosystem, we're now at interesting levels for potential buys. What else should we consider? Well, assets could still drop a bit more, so the smart move is to buy in parts. For example, in Bitcoin, you could make a purchase at this level, and if it drops into this next zone, you buy again, averaging your entry price. This same approach can be applied to your favorite asset. The idea is that we're in a market trap at an extreme, which could lead to an upward move in the medium to long term, and it'll be easy to tell if this plays out, because the moment price makes the trap within the trap, which as I mentioned, is another possible buy zone. If it then fails to recover, that's when you act. At that point, you eliminate risk entirely, exit everything. To put numbers on it, not talking about specific levels, but just as an example, you might take a 6% loss, but you're not aiming for a 28% gain. You're looking to reach all-time highs. This is what I mean when I say we're in a really solid moment, where we have risk tightly controlled just the way we like it. And hey, if the price ends up collapsing, so be it. We lose a little, but we aim to win big. If you found this advanced technical analysis interesting, let me know in the comments. Also, hit the like button, subscribe to the channel, and click the notification bell so YouTube lets you know when new content drops. And don't forget to share this video with other trading and crypto communities. See you in the next one. Take care.